Hello, what's up, good people? Good to see you once again. Tofauti kati ya investment, a business, and a job. Tofauti ni nini? Alright, so today I'm gonna share with you and bust the bubble and explain to you what are the differences between the three things that I've just named. Because sometimes I receive a call and somebody tells me, hey, you know what, God Joseph, I started a business, and by the way, I've invested. Starting a business is not investing. That's a different thing. All right. So I'm going to share with you step by step and explain to you exactly what is the difference between the three of them so that you'll be able to understand when you're putting your money there, what are the risks? What are you doing? Are you investing? Are you having a job? Are you starting a business? So that you get all the differences right for you. This information is not actually out there, but I'm going to share with you as always in this Good Joseph channel. And because I don't want you to miss any of my future good videos, this is how I want you to do it. By the way, it is free, doesn't cost you anything, and it is fast. All right. So listen up. Up before chini, just down below there on your right, there is a subscribe button. It is written in black. Just hit that button. Then on your left, there is a like button. Hit those two magical buttons. And guess what happens? By only doing that, YouTube will notify you when I upload a new good video. Alright, so before I don't want to waste your time, let's jump into today's business. Alright, so let's start with the very basic one that you know very well. What is a job? A job is that place that you show up each and every morning from 9 p.m. or rather 9 a.m. to 5 p.m. and disseminate your services and get paid depending on the work that you do. All right. So that means what you get at the end of the month or at the end of the week or at the end of the day, we call it an income. All right. You disseminate your service. You show up from morning to evening or from evening to morning, depends on your shift. And then what you get at the end of the day or at the end of the week or month is called a salary or an income. All right. You have nothing you can do about it. Whether you underwork or you overwork, the money remains constant. Unless a certain guy somewhere called the CEO decides to, take you further in terms of, I don't know, ranks in the businesses and add you some a little bit just to make you feel like everything is worth it, and that is it. All right. So that money that you get at the end of the day or month or week or whatever the period, that money is called a salary or an income, and you have nothing you can do about it. And for you to qualify for that specific job, depends with your qualifications, like the academic qualification, the number of years in terms of experience, and of course the references and the referencing and such kind of things. All right, so now that takes us to the second one, which is business. This is where the confusion comes in. A lot of people tend to think that when you start a business, you've invested. No, that is not it. Investing is quite a different thing, as I'm gonna check out about it. All right, so in starting a business is whereby you save a certain amount of money. Say you are employed, you are saving a certain percentage of income. You take that percentage of income, you accumulate it, you store it until it reaches to a point whereby it's now called a capital. You now take that capital, you put it somewhere, you put it on the go in terms of a business. Now, what you've done, you've started a business, and what you're aiming at getting is a capital gain. All right. That means, and if you have to show up each and every morning from that business that you've started, you have to make calls, you have to follow up, you have to be there, either physically, mentally, making a call or online or whichever the way, but you have to show up for that business to run. Then that's what we call working for the money. Now at that particular point, money is not working for you. You have to show up. The question is this: say you're a business person and you're watching this video. Ask yourself, if you were not to show up tomorrow in that business that you have, and the next week, and the other week, and the other month, and the other year, will the business still remain? Will you still make money? Will you still be able to actually sustain yourself in everything that you're doing? Then if the answer is no, then that means whatever you're doing, you're working for the money. And that's what we call, quote unquote, working for money, or sort of a slavery thing or something of sort. All right. So that means that you've not invested. What you've done, you're working for the money. But there's something good news about this kind of of a business, is that the returns are usually high and the risks are still high. Because I always say, once the risks are high, of course the returns are still high, and you have to show up each and every moment. Now, at that particular type of a business, say you're dealing with services or you're dealing with goods. If you're dealing with goods, of course, you're buying a product at a certain price and then you're selling it at a certain price. Of course, the difference between the buying and the selling price is what we call the capital gain. That money that you get at the end of the day is called a capital gain. The money that you get in terms of a profit, usually the one that usually call it a profit. All right. Now, this is what happens now after you've graduated yourself to the next level. Now, after now understanding all the difference, now we go to the third one, which is my favorite. And this one, you better listen. All right. Now, investment is quite different. It's a vice versa of a business. An investment is whereby the money works for you. You have nothing to do about that specific investment. Say today you buy shares of a given company. you have nothing you can do about that given company. You know why? The company already has the board of directors. The company has the salespeople. The company has all the systems in place to work for your money. They take your money, they put it on the go, they invest that specific money, and then once they get the profit, you are entitled to get a dividend, or the profit commonly known as the dividend. You have nothing you can do about that specific business. All right. Now, take an example as well. If you get ahead and buy the bonds or the bills, or maybe you invest in something like balance fund, the bond fund, and index fund, or what have you, that means that whatever you're putting your money out there, you don't have a control over it. Meaning, when I say you don't have a control over it, I don't mean like you've lost your money. What I mean is that you just do nothing. You put your money out there, you sit on your couch, just relax, wait for the semi-annually or annually, and then you get your returns. Yeah, I know what you're thinking right now, and that is true. The returns on this type of an investment are not high, but the risks, the same, are low to almost zero. All right? So that means that if you put your money out there, you can even like don't even show up tomorrow, don't even show up next week, next year, the other year there, you do nothing about it. Like recently, like less than 3 weeks ago, or less than a month, you find that the government of Kenya floated an infrastructure bond, which we call the IFB, for 17 good years, and they were giving a return of 14.399%. And they're paying that specific thing after 6 months. Like the 14% you divide by 2, you get 7% and 7%. And if you put your money out there, you usually receive your money for the next 66 months, and the next 60 months for the next 17 years. And then for the next 17 years, if you put your million bob out there, if you put your 100,000 out there, then that means you can be able to be getting that specific amount of money, you doing nothing. So you put your money on the money market fund, all right? You put your money on your money market fund, then you'll be receiving your interest, or rather your what? Yeah, sure, it's called interest, but in most cases, usually called sort of a dividend. All right. So investment is where you do nothing about your money. The money does everything for you, and then from that particular place, that means that you are able to monitor everything from the comfort of your chair. Unlike you operating a conventional business out there, that you have to show up, you have to employ people, you have to know, you have to follow, you have to really know exactly what is going on. Because if you don't, then you're gonna get yourself into troubles and into problems. All right. Now, this is the differences I want you to understand in this particular point. Among the three things, among the three, type of the things that I've discussed, that's the job, the business, and investment. We all start somewhere. All right, don't feel like, okay, fine, I feel like I've been left behind and something of sort. Say you're still on the job, you can still get yourself into investment. Some of the people who are employed, they usually, or it becomes hard for them to operate what we call the businesses. For example, say you're employed from 9 a.m. to 5 p.m. You cannot be able to operate where you're employed and as well operate a normal conventional business. So you find all of them, or most of them, they tend to go ahead and jump into investments. That's why you find them buying SACCO shares, whereby you get your returns at the end of the year. And by the way, they have some of the best returns. Sometimes you get 17%, sometimes 14, 15, 16, and something of sort. So that means that if you can get your money, put it somewhere whereby it is earning for you some interest, and then overall in return, one day you withdraw your money and get to do something in return. So you bought that IFB bond out there, and then for the next 17 years you'll be receiving all that percentage, and then at a certain particular point you want your money back after the period has expired, or we call it the maturity date. Then you can get your money, or you're given your money, and then you can do whatever thing that you'd like to do. Okay, so let me just recap exactly what I've just said. There's a difference between a job, a business, and an investment. A job is where you're employed from morning to evening, or from evening to morning. And then what you get at the end of the month is called a salary or an income. And number two, we have the business. The business is whereby you started with the money that you've saved out there. You start a business somewhere, and then what you get is a capital gain. You're either selling products or whether you're dealing with services. If you're dealing with services, the same case applies. You disseminate your services out there as a business owner, and then at the end of the day, you get the money. That is called a capital gain. But when it comes to investment, this is where you get what we call the cash flow. A cash flow is whereby you're doing nothing about the money. The money is doing everything for you. You just relax out there, gives you the returns, and you get what we call the cash flow. And some of the areas that you can be able to invest in this specific cash flow are namely as follows. You can get yourself into balance bond. You can get yourself in, excuse me, you can get yourself into index fund. You can get yourself into bond fund. You can get yourself into money market fund. You can get yourself into treasury bills, treasury bonds, SACCO shares. All those areas you can put your money out there and get to earn dividend. I know perhaps those names sound a bit complicated and maybe like they require a lot of money. Don't be fooled. They don't require a lot of money. For example, if you want to get into money market fund with as low as 100 bob, yes, there is a company that's allowed 100 bob. You can get started, like 1,000 bob, 2,000, 3,000, 5,000, and something of sort. With the treasury bills and treasury bonds, treasury bills you require 50k or 50,000. With treasury bonds you require 100,000 if it's a infrastructure bond. If it's a FXD, then you require 50,000. So those are the areas that you have to consider when you're putting your money out there. Say you're a busy person, or maybe you are outside the country but you still want to invest in something, then these are the areas that you can pick up and do something about it. Otherwise, if you keep on clinging into conventional way of investing and maybe you don't have time, then you can get yourself into problems or into troubles. All right, so anyway, guess what? If you're out there and you're confused, you don't even know exactly how you can invest all on in those the areas that I've just named, guess what you can do? You can get my booklets. I have booklets about all those areas that I've just named: money market fund, treasury bills, treasury bonds, circle shares, and what have you. So you can inbox me, get my number from the specific or from this description of this specific video. You text me on WhatsApp, you get all the booklets or one of the booklets, depends on what you want. And actually it's quite affordable. It's only 220. You get the entire information, you start investing, because it's as simple as that. Maybe to give you just a small sneak preview, for you to be able to start be able to buy a treasury bonds or bills, you need to have yourself a CDS account. The same case applies to shares, but those two CDS accounts are quite different. Anyway, for more information, you can check on the former videos that I've actually posted on this channel. All right. So perhaps this is your first time to see this face in this specific place, then consider subscribing. My name is Joseph. Talk about money, talk about investment, anything related to your cash. I'm literally this guy who showed up and tell you, hey, you know what? You're not supposed to devour everything, all right? Because only a fool does so. Because I'm a believer, just like an iron sharpens another iron. Take 1 second, just down below there, comment down below and tell me, where are you in terms of investment? And were you confused as before? And have you gained anything out of this video? If you do, then click that like button, share this video out there if you're in a position. So for now, it's a goodbye and see you in the next one.